Good morning. It's Andrew O'Donnell with Supercharged Stocks. It's a gray day here in Vancouver, but I can't complain. It's November. Wonderful to see Cory Diaz here from Anfield Energy. I'm really excited to have a conversation with you because we want to get a bit of an update as to what's happening with Anfield Energy, with uranium. I know you have some news that you want to get out to people as well. My view on uranium is, why isn't it going? Like, there's a lot of excitement. Everyone that I speak to is well aware there's a new energy push coming along. So maybe you can kind of give us your take. You're certainly an expert in this field, and let us know what Anfield is doing in the short term and then in the long term.
Sure. All right. Thanks, Andrew. Appreciate you having me on again. As you mentioned, it has been a bit of a whirlwind summer, I think, for the entire sector. There were some expectations that the market was going to pick up on the back of the uranium reserve that we discussed in the past. The uranium reserve hasn't been funded. The hope is that as the Biden administration steps in, it'll look forward to funding the uranium reserve. Because I think at the end of the day, the Democrats are on side for the nuclear age. They're looking for renewable power or clean power, and this fits into the wheelhouse. There's no way to separate green and clean from uranium. And so they'll definitely be stepping up their efforts to push forward, with that mandate. So we're pretty excited with this new administration. And we feel that, in some ways we may find kind of a more consistent message or more follow through when it comes to putting monies in place to support green energy through the Biden administration. So we're really excited about the prospect of the new administration stepping in.
Yeah, it's really, Biden is certainly a champion of that, and that's what's so exciting. Whether it's, I look at like World Economic Forum, I look at BlackRock Capital, who's got $8.5 trillion, and they're saying they've earmarked $1 trillion towards ESG and energy and this kind of new shift. I think also the IMF is talking about this type of thing, as well as, you've got ARC investment funds, which is all about innovation. They talk about battery energy storage and energy moving forward. And even if I hearken back to the Great Depression, not to make an analogy that way, but what really did well was energy and gold, both mining, go figure. Yeah. And then innovation kicked in after that. But I look at this in some similar fashion, is that the powers that be, especially the ones with the money, are saying we're going forward in this direction. So this, although it may not be the flavor of the month because Tesla seems to be the big play when everyone thinks of green, is that people need to kind of remember what is right now today. What do we have right now today that is green and clean? And that is uranium.
Absolutely. Yeah, nuclear power has always been kind of dismissed as a separate type of energy source. Obviously you've got coal, you've got oil and gas, but it has always been clean, the cleanest source of energy for baseload power. And, it's obviously gotten a bad name because it's had some issues in those black swan events. But at the same time, it's something that's always been used worldwide. And you look at the US, 20% of the power grid, the power is generated and derived from nuclear energy, and that can't disappear. And the fact that you've got kind of a net plus in terms of the number of reactors that will be in the US in the next 20 years, means that it's not going away.
No. And also the technology in the past, say 20, 30, 15 years has increased dramatically. So the safety factor, the regulations in place, it's a way that we have to go. If you're talking about really, if you're serious, this is the way to go. So long term, we see that happening. And I think you want to touch a bit on the Charlie property in regards to that a little bit. And then also, one of the great things about being nimble and agile in the market is that you can also address some of the market plays to draw attention as well. And I'll let you talk about that. I don't want to steal any of your thunder, but.
Sure. Look, I guess there are a couple of things. Even though we've had discussions in the past, this whole year has been a very unique year for everybody. So we're not excluded from, the kind of twists and turns associated with COVID, et cetera. So we've had a lot of time to kind of look at our portfolio and determine kind of where should we be focusing our efforts for the most part. We always do that, but we've really kind of dug down into the weeds to really say, look, here's how we should prioritize kind of our asset base or asset portfolio. And Charlie has always been kind of the number one asset in our portfolio in terms of nearness to production, in terms of low cost move to production, and in terms of access to a producing facility. So it ticks all the boxes from that perspective. When we look at the rest of our portfolio, obviously we have other ISR assets in Wyoming. Those ones are probably ones that we could look at, from this kind of a medium to longer term perspective. Not sure if they really fit into the current uranium cycle that we're expecting to come. That's probably in 8 to 10 years, typical to what happens. So Charlie basically can fulfill most, if not all, of that cycle for us. So when we look at the other assets in Wyoming, certainly there could be a possibility of getting, one or two or maybe three of those assets into the current cycle, but the vast majority are probably kind of next cycle assets. And then when we look at the hard rock assets, those actually you need a much higher uranium price. So we're probably looking even longer term potentially for those assets. So once again, not necessarily current cycle assets. So, as I said, we focus on the near term asset like Charlie. And we also look at, when we look at our portfolio, we're saying, okay, our focus is on, near term cash flowing potential assets. And so, that doesn't necessarily restrict us to uranium itself. We also look at other assets and other commodities which have the same kind of production profile that a Charlie would have. So kind of a low cost opportunity, near term production upside. So we've been, looking around, and we've got a very interesting board. We've got board members who've worked not only in uranium or nuclear, but have also worked in the other metals, whether it's precious metals or copper, anything else, even potash. So we've have kind of a plethora of knowledge when it comes to different commodities. And to be honest, I'm not sure if you know, but Anfield originally, when I joined the company 8 years ago, it was a copper company. So
yes.
we've looked at other commodities in the past, and so we're familiar and comfortable with other commodities. So we're not, we don't restrict ourselves strictly to uranium. We think uranium is going to have a massive run going forward, but we also think at the same time, we have to look at assets which provide the same type of profile that we're looking at with Charlie in order to look for avenues to generate cash flow. It's all about, mitigating risk, but also strengthening the portfolio in a way that allows for, more than one path to growth, to cash flow, to production, to revenue.
Yes, and we talked on the last time too, is when uranium goes, it goes fast. So it's great that you can get involved in a company that's looking at also near-term production. So we're not looking at blue sky potential off in Peru or in the middle of Mongolia, and those are exciting. Those are big blue sky, like, oh my gosh, we're going to find a massive discovery, possibly. This is, listen, we can bring cash flow in quickly into a cycle that a lot of people are becoming more aware of with commodities, is that there is a desperate need to fulfill this electrification, this new energy, the infrastructure that needs to be brought into place. So I love that ability to pivot, which a lot of companies can't do. And like you said, there's a wealth of experience to look at other commodities that bring value, but also bring some fresh eyes, because it works in kind of like an optionality play of, listen, you want to have Anfield in there because you're getting at a screaming deal with an asset that is going to be ready to go. And hopefully it is going to be a quick transition too with the Biden administration. And there's going to be an advantage there, but also to look at these newer assets that you're considering.
Yeah, absolutely. Look, I think, if you look at the commodities that are strong today, whether it's silver or gold, there is also a hedge. There are a lot of things happening in the world against which having a hedge makes a lot of sense, right? So I think we also don't want to just be so myopic in our view that we're just saying nuclear, or uranium. We have to look at the broader picture too, right? And once again, another consistent, underlying, belief on our side is that, we like the United States. We like operating in the United States. So even if we're looking at other assets in the other commodities, we're not going to, diverge from that view. So we'd be looking at something in the same market with the same risk reward profile, the same, low geopolitical risk, those are things that still are fundamental to the way that we, pursue assets.
No, and that's another thing that really checks my box is that, you hear this consistent theme from majors, from even funds. It's like this: the money's coming home. It's, listen, we know there's going to be a big ESG play. We understand that there's going to be governance issues, and we already have strong regulations in the West. So I love that if we can get that message home to people, that's where the big people are looking. That's where the big funds are looking. And they just need to be reminded and see that, yes, there are assets and there's near-term production assets right here to take advantage of quickly, and that can be turned on quickly. That's one of the things I liked about Anfield right off the bat.
Great. Well, that's great. I mean, I think it's, once again, it's a big part of our push when it comes to looking at the commodities. Once again, as we talk about kind of the mix of the assets that we have, we've been very consistent when it comes to getting assets which have a history of resource or a current resource on them too. So we're not out there looking at assets when it comes to just greenfield, brownfield assets. We're looking at something which has a resource on it already, which obviously can accelerate that path to production. So it's been very, it narrows the number of assets that we can look at or potentially consider. But I think it's important for us to say, look, we're not an exploration company when it comes to another commodity. We are very much looking at something consistent with what we have in our current portfolio.
Excellent. So that's good. That can kind of gives me a hint to let people know, keep an eye on news. It's never too early to start taking a position. I always say that to people. You want to be in positions where you believe in the management, you believe in the story, you see that where things are going, you have the assets with Charlie and extended ones. This is a great opportunity for someone to get into the stock and start building as you're making the commitments, as you're hitting the milestones with the news. So I urge people to take a look, especially at the Charlie property if you're on a short time period. But there is an opportunity here, short term as well as into the new year.
Absolutely.
Perfect. Thanks so much, Cory. I really appreciate you taking time and catching us up to speed on this. And we look forward to hearing any news coming out soon.